Hey there, and thanks for watching. Over the next few minutes, I'm going to walk you through my commercial real estate lease analysis tool. Now, this tool is meant to be used to analyze a lease, either from the perspective of a landlord or the perspective of a tenant. Now, in full disclosure, I've worked a lot on the landlord side, less so on the tenant side, almost no experience on the tenant side. And so I reached out to several tenant rep brokers that I've worked with in the past, asked for some guidance around what cash flows, what metrics matter to tenants, and that's the outputs that you'll see on the tenant side. But if there's more that you'd like to see, please let me know. The model is continually improving over time, and so if you see something you'd like changed either from the perspective of the landlord or the tenant, yeah, just shoot me a message and I'll include it in a future version of the model. The other thing I should note is this is very much the beta version. What you're going to see today is the first release of this model. If you're familiar with any of the a.cre models, we're constantly updating models. Generally, it takes about a year for a model to get out of the beta stage once we have sufficient feedback from users and use from users before we get to that stage. So again, if you find bugs or there's something you'd like to add, just let us know. Now, again, if you've used an a.cre model, this first tab is going to be familiar to you. It's the versions tab. It's here where you're going to see what's changed since you watched this video. So right now, this is beta version 0.1. It's the initial release. Likely when you're watching the video, there'll have been some updates made to the model. You can come to this versions tab and just view what's changed in the model. I also have some helpful links, link to our library of real estate models where you can check out the other models we have. And then once this model goes live, we'll have a link here to the model's webpage on a.cre, as well as just a general guide to using our models. So that's the versions tab. Next, I'm going to jump to the lease abstract tab, and we'll come back to the summary tab here in a second. So the lease abstract tab is where the majority of your inputs are going to go. And again, if you're familiar with our models, inputs are blue font cells. So anytime you see a blue font, it must be changed. You'll find placeholder values that have been included in our template models, but the assumption is you're going to change those blue font cell values to something to match your particular deal. Now, the lease abstract really is meant to capture all of the information related to the lease. And so if you've ever created a lease abstract, what's cool about this model is I have a lease abstract, institutional quality lease abstract. I've done a fair number of lease abstracts in my career. I have identified kind of the key points that I generally see in a lease abstract. And then using the lease abstract, I then model the lease cash flows. And so you don't have to duplicate your inputs. Just simply create a lease abstract and out will come your cash flows from that. Now, in terms of the lease abstract, it's going to be broken into sections. The first section being just a description of the rentable space, the building name and the address, the suite that this particular tenant would occupy or is occupying, the rentable area of this suite. Now, you can change the measurement type, either using square feet or meter square, just by changing this toggle out here off to the right. Leave this at square feet. You can create a property type or set the property type for the building and for this particular space. By default, in this version of the model, I have retail, office, industrial, and other. Over time, I might add some complexity to that. If you're interested in seeing or updating this dropdown, all of the data validation lists are housed on this data tab. So property type, this list, and you can add to the list if you want simply by coming to this list, inserting a cell. Let's just go ahead and insert a cell here, shift all the cells down, and then you could have a new property type. As long as you insert it within that range, if I come back to the lease abstract, now you're going to find that there's new property types. Let me go ahead and undo that. That's your property type. Also have the option to enter whether there's reserved parking spaces, unreserved parking spaces that are allocated to this tenant, and then it will calculate for you the parking ratio on a per 1,000 square feet or per 1,000 square meters. In this case, 4.5 is the default based on the placeholder assumption. So that's the description of rentable space section of your lease abstract. Then we get to the tenant description. It's just things like who is the tenant, what's their name, what address is the tenant located at, what type of company, and I've got a long list here of company types. But you can also update, again, this company type list by coming to the data, company type. So you could add or remove company types from your list. Year established, the headquarters where this tenant is based, some contact information. I imagine, or at least when I use a lease abstract, this is often where I turn to understand, if I need to contact the tenant, this is where that information is housed. And so we have the contact info, as well as the name or entity that is the guarantor of the lease, as well as the value, call it the net worth of the guarantor. Then we have some other just kind of basic metrics about the company, number of employees, annual revenue, and company credit rating if applicable. And then again, a drop-down menu here where I have different S&P credit ratings and an NA if it's an unrated company. And again, this drop-down menu can be changed in that data tab. So that's the tenant description. Then we get into the lease details, and this is really the core of this lease abstract. And we start with the basic lease provision. So when was the lease executed? What's the lease commencement date? What is the analysis start date? So for instance, today is October 1st, 2022, as I'm recording this video. And so I set the analysis start date as of today. However, the lease was executed 6 years ago and commenced almost 6 years ago. No, 8 years ago. Did my math wrong. And so the point is our analysis starts today. And so as we're looking at call it the cash flows of this tenant going forward, it does not include the cash flows from the past, in this case, almost 8 years. So that's where the analysis start date. That's the date from which you want to analyze this lease. Now, if it's a new lease, the analysis start date is likely going to be the lease commencement date. So you have those important dates, and then the model automatically calculates for you the base lease term. That would be the base term excluding any options to renew, as well as the base lease term remaining. So again, this lease commenced December 1st, 2014. Today, or the analysis start date is 10/1/2022. There are 7.2 years remaining on this lease, which has its initial expiration date of November 30th, 2029, 15 years from its commencement. Now, is there a termination option during the lease? So this has so for instance, here you have a 15-year lease. You might have a termination option, say at the end of year 10 with some termination notice period. And if you toggle that to yes, then you can enter that, and that gives you a sense for, okay, there's a termination right, and it tells you how much term is remaining until that termination option. So if there were this sort of scenario here, you've got 7.2 years remaining on the base lease term, but the tenant can technically terminate in 2.2. So you really only have 2.2 years of contract rent remaining. I'm going to toggle this back to no. Then it asks, does the tenant have a right of first refusal? And if so, what's the notice period for that? And then just the question, is there percentage rent? And if there is, you would detail this percentage rent here. Now you'll model the percentage rent below. This tool does not yet have a robust percentage rent calculation module. It more mirrors the other rent types. Over time, if this is a feature that people want, then I'll go ahead and create something more advanced for this. But for the meantime, percentage rent is you detailed in this box, and then down below you add it as an additional rent item. Then there's a question around late fees, if there is, and you're going to detail that out. And again, that's just simply reading the lease, understanding the late fee clause, and then detailing it here in this box. So those are basic lease provisions. And then we get into the rent schedule. And again, only change the blue font cells, and to help out to truly understand what are input cells, on this particular tab, I also put a blue background behind every input. And that's because in some of these sections, it's not necessarily clear that these are input cells, but they are. So for instance, let's start over here. So I have, again, our placeholder values, and I'm going to go ahead, and I'm just going to go and delete all of these. Okay, and we'll start over. So the question is, what are the frequency of rent types? So let's imagine that rent changes every year and you've got a 15-year lease. I'm going to go and I'll put my end here, 11, 30, 20, 15. Okay, the first year of this lease, 12 months. And let's say that the rent per month is, well, we have 10,000 rentable square feet. And let's say that it is $32 a foot, but then it's monthly, so I'll divide that by 12, and it starts at $26,667. Now it asks billing frequency. Most likely this is by month, and that will be detailed in the lease. And then the type. Is this a base? Is this part of the base term, or is this an option? So this is the base, right? We have 15 years in the base. And then any comments around that if you want. Now from here, I'm going to add annual rent bumps that are 2%. So the easiest way to do this is just simply have the start be 1 day following the end. And then I'm going to come back and I'm going to go EO month. And this is just a quick way to go out 1 year. Okay, I use an EO month and then I use 11 months forward, but EO month grabs the last day of the month. Another way you can do it is EDate. EDate simply goes forward from 1 day to a certain number of months. Let's go 12 months, but then go minus 1 day, and it comes out to 1 year later. The period is 12 months. Now I'm going to grow this by, what did I say, 2%? That's my new rent. Billing frequency is the same. I'm just going to go ahead and copy this down. Now, when I copy it down, just to keep this simple, I'm going to copy and paste as values only. So right-click, paste special, paste as, where are they at? Right here, values. Or you can use the keyboard shortcut, Alt-H-V-V, okay? I'll just add those. Let's see, is that 15? That's 12. 12, 13, 14, 15. So I go out to 15. And these I can copy down the same way. Now I'm going to copy these as formulas. So again, it's a special, paste special. So I can either paste as formulas or I can use Alt-H-V-F. Oops. Do that again. Copy, and then Alt-H-V-F. So now I should have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. But starting from 2014 to 2029, that would be 15 years. I can actually copy this down, but as formulas only. And now I have my rent schedule with annual 2% bumps. Okay. Now the reason why I did it this way rather than you simply entering an input for an annual increase is, in my experience, most leases have a rent schedule. And oftentimes the rent schedule is a 2% annual, or maybe it increases by $1 a square foot. But oftentimes you might have rent that increases by, say, 10% every 5 years, or you might have irregular that don't exactly mirror a percentage per year. And so that's why you'll actually enter the change in rent by year. Now, what if you had 10% bumps every 5 years? Well, again, let's undo what we just did. Instead of the start to end for the first rent period being 1 year, it's going to be 5. And so I'll do an EDate, and I'll go 60 months forward. I'll subtract it by 1 day, such that I get November 30th, 2019. Now that's 5 years, 60-month period. Let's use $32 a foot. And by the way, you can use the NRA shortcut to grab the rentable area. I'll divide that by 12, 26,667, billing frequency, let's assume month, type, this is the base. And then again, do the same thing. And I can actually just copy this down like so. and then we're going to go out 15 years. All right, same thing, 1128. One little quirk here is it didn't go, I know what I need to do. Actually, I know what I did wrong. This needs to be +1, okay? There you go. So 15-year term, rent increases though by 10% every 5 years. So the effective annual increase is less than 2% because in 2% annual bumps, it compounds every 2 years, right? So this is a 10% bump every 5 years, billing frequency the same, like that. Now let's imagine that this lease also included some options to extend. Let's imagine that they had 4 5-year options to extend. So I would do the same thing, just continue this down 4 more times. And let's say that they were 10% bumps in the options, billed monthly. Only the type this now is an option rather than the base. Now this is important because the analysis is done from the perspective of the tenant and the landlord only in the base year. Now you can see the entire term inclusive of options, but the summary tab only looks at the base term. And that's because the reality of an option is the tenant just has the ability to extend, but they don't have to extend. And so from the perspective, at least of the landlord, an option is something that's value to the tenant, not necessarily value to the landlord. The other thing is the options are uncertain where the base is contractual. So that is our rent schedule. And what happens is once you enter this rent schedule, you'll see when we go to the lease cash flow tab that these cash flows automatically are modeled out. We'll get there in a minute. Okay, so the next thing we have is other tenant rent. So we have, just call it our base standard rent, but there's other rent that the tenant might pay. Parking rent, storage rent, maybe there's an administrative fee that's paid every year. Maybe there's percentage rent. And so here's where you enter some amount. And this is why I mentioned earlier that this is a simplified way to think about other rent. I just have some annual escalations and some rent amount per month. So for instance, parking, I have a comment here. There's, if you recall, 10 reserved spaces. Let's assume those are 120 per month per space. Let's say that contractually that increases by 2% a year. I just go 10 times 120, and then I grow it by 2%. And this will automatically be modeled. Now, if there were other rent values, let's say that there's a percentage rent, and historically it's been about $25,000. I know that percentage rent has kind of a hurdle that has to be hit, and there's, again, a more sophisticated way to calculate percentage rent. But for this model, to keep it simple, let's say that there's a flat, you're going to expect $25,000 in percentage rent, and let's say we're going to expect that to grow by 1.5% a year. Now your percentage rent is included in the analysis. And you could say, above 1 million in annual sales. Something like that. For now, I'll just leave that as none, leave this as 0, no percentage rent, just parking rent. So that's our other tenant rent. Now, the next part is the trickiest, and that is dealing with expenses. Operating expenses, and if the tenant has a responsibility to pay any capital expenditures as well. So this is the section where different expense line items are detailed out, and oftentimes these will be detailed in the lease. And so we actually have here columns where you identify where in the lease is this line item expressly called out, and where the reference document. Is it an amendment? Is it the lease? Is it an aside letter? Whatever you have you. And so here, I just grabbed a lease that I had in my drawer, and I just kind of looked at it. And here you had, in this particular lease, it was a base stop lease, meaning when the tenant signed the lease, there were pro rata expenses assigned to that tenant with a base year, meaning the landlord would pay all expenses based on that base year. And then any increase in expenses over time would be borne by the tenant. And so, for instance, utilities, The base year when this tenant signed in 2014 was $7,500. Well, our estimate for the forward 12 utilities that are the tenant share of utilities. So the tenant share in that base year was $7,500. I shouldn't say the tenant share. The allocated share to this space was $7,500. The tenant pays anything above $7,500. And so in this case, where we're projecting utilities for the forward 12 at $11,582, the tenant pays the difference between the $11,582 and the $7,500, and the landlord pays the base year, that $7,500. And then there's some assumption for annual growth rate in that expense item, and then some comments, right? Utilities, cleaning, general cam, property tax, insurance, these are all billed monthly. Certain things are shopping center and paid via the CAM. So for instance, security, trash, parking, R&M, repairs and maintenance, landscaping, and windows. Those are actually covered by the shopping center and then paid through the CAM line. So the shopping center bills this space in the forward 12, $28,743. The base year value for the general CAM was $22,500, and so the tenant pays the difference, $62.43. Property tax, similar thing. Insurance. These were all assumed to be base year. Now, let's imagine that the utilities are 100% the tenant's responsibility. If I toggle that to tenant, what you're going to see over here to the right is that now the tenant is fully responsible for the forward 12 expected utilities and any growth in that utility number. The reverse would be the landlord is responsible. And if the landlord's responsible, again, the tenant pays nothing. That would be considered a gross lease. Other places the expense on the landlord, but the assumption really is if it's other, you're just going to zero these out like here. Or in other words, it's paid by someone else and therefore it's not part of this pro forma, or it's included, say, in the CAM. So here I'm going to take it back to base year. And the reason I do this is so you can see how the landlord pays a portion of the expenses, the tenant pays a portion, how the amount that the tenant pays increases over time. You'll see that on the lease cash flow. But if this is a triple net lease, the tenant would pay all of these items. Tenant, 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 right? And then the landlord has none. Now, we do have HVAC, roof, structure, walls, foundation. The landlord, I'm going to call those a capital expenditure and therefore not part of my operating expenses. But sometimes you may want to include them, and so that's why I have these as line items. The other thing is these are all blue font cells. So you might have different line items that are called out in your lease. You may have more, you may have fewer, but these are the expenses and who pays what. Then we get to insurance requirements, and this is more part of the lease abstract. It's informational. It's to help you, your asset manager, your property manager understand who's responsible for what type of insurance. And so I just have these listed out. I have the option to have up to 9 insurance types, and then who's responsible to secure that insurance and any notes about that. Next, we have concessions due. All right, these are outstanding amounts that the landlord has to pay to the tenant, or has to pay as it relates to the lease. Now, leasing commissions don't go to the tenant, or the tenant isn't the beneficiary of leasing commissions, and so leasing commissions would not be part of this. But when I think of concessions, inducements really is a better term. This is what the landlord spends in order to secure a lease from the tenant. Now, I get that the placeholder lease that's included in this model assumes a 2014 lease start, and so you would assume that all of these things have already been paid, and this is outstanding amounts that the landlord is yet to pay the tenant. And so in a traditional lease that's already been out for 8 years, these would all be zero, right? I'm leaving them in just so you can see the effect on the cash flows of it. So this imagines that the tenant came to us in the last few months and negotiated some additional TI and some additional free rent. Maybe they're struggling, or Maybe they've agreed to exercise one of their options and extend, and so the base term has extended out. Maybe it was 10 years and now it's extended to 15, whatever that may be. There are some inducements that the landlord is paying in order to secure the tenant. In this case here, there's some tenant allowance supplement, is what I called it. You might have multiple tenant allowance payments, and in that case, you would have multiple lines here because these are individual payments at a date specific. So, for instance, TI payments due at analysis start, right? So there's some TI payment due at analysis start, and then there are 6 free months from analysis start to today. And I had a date here that doesn't really track, and so I'll update my comments. But again, you're going to have whatever comments you have. And then the free rent is what? Well, it's equal. This is 1 month. It's equal to 1 month of free rent. And where are we at here? 2022. It's that amount, right? So that's my free rent. And each month there's that amount of free rent. I'll just set these values. Okay. And so again, these are payments that the landlord has to pay in order to secure this lease. Now, there's one other item, which is tenant investment in the space. So if you're thinking from the perspective of the tenant, you may be receiving an allowance to make improvements to the property, but maybe the allowance isn't enough to finish those improvements. So maybe the landlord is going to cover 75%. You're going to pay the other 25%. In this case, there's $50,000 coming from the landlord. There's $20,000 that the tenant will invest as part of the build out, the tenant improvements. $25,000. It's going to be paid as of the analysis start, and again, that's coming from the tenant rather than from the landlord. And that's entered here. Again, you'll see it on the cash flows. It affects the tenant's total outlay as part of this lease over 15 years. And then finally, you have a comments section. Make some final comments about the lease. Any clauses that are unique that you need to call out. Here, for instance, tenant must comply with the conventions of the CC&Rs, which is operated by the owner of Parcel 7. The operator is responsible for common area repairs, maintenance, electricity, signage, conformity, and billing tenants monthly for their share of taxes, insurance, and camp, right? So some notes to help property manager, asset manager better manage the asset. And then, again, in a typical lease abstract, you have someone who prepared the lease abstract, someone who approved it, and the date at which those two events occurred. Now, this lease abstract tab has been built to be printable. And so you have these blue font cells with blue background to identify what you're going to be changing on here. And once the lease abstract's done, you'll come up here to this box where you toggle between print mode and edit mode. And I move to print mode. And what happens when you go to print mode is now all the font turns black and it's in a printable form, such that I can go to File, Print, and you'll see that it prints into nice, attractive pages, all right, with a footer. And you'll see in a moment the summary tab also prints. So that is the lease abstract, and this is really the foundation of our inputs in order to create or to model the lease cash flows. So we go to the lease cash flow tab. There are just a handful of inputs on this lease abstract tab. And really, the only inputs are the discount rate. If you do a net present value calculation, either from the perspective of the tenant or the landlord, what discount rate are you going to use? In this case, by default, I put 12%. Otherwise, everything on this tab are outputs. They're calculations of things like scheduled rent, parking rent, storage rent, administrative fee. Up top, you have the annual cash flows. And again, this is the top is the base term plus the option. So you can see what rent looks like through, in this case, 28 years would be the end of the base term plus the options from the analysis start to today. You'll also notice the very last year won't necessarily be a full year. It's a stub year, right? So the analysis starts in a given month of the year. And so your last year may only be 2 or 3 months. At the bottom, though, I annualize that for some reporting purposes. But the actual cash flows are based on a monthly analysis that is at the bottom of this worksheet. So we call these the tenant responsibilities of the lease, plus any tenant investment in the space. And you see the timing of these cash flows over time. We also have a row here, 15, where the model calculates the year-over-year change in the tenant's total responsibilities, right? So it makes sense. The start of 2024 to 2025, there was that 10% bump in the lease, and so you have some increase. Actually, I think some of it was captured here, and some of it was captured here. Plus the tenant and reimbursements didn't increase by a full 10%, so that's why it's 9% rather than 10%. But you get the idea. That's the year-over-year change. Then we have the landlord responsibilities, things like a tenant allowance, tenant improvement allowance, free rent, any cash payments that are made to the tenant, and then other landlord inducements, and then the operating expenses at the property. So if the tenant is reimbursing $19,095 and the total operating expenses that are the proportionate share to the space, the landlord is going to pay the difference. And you'll see that down in the bottom here in a minute. Okay, then we look at the base term only. And this is a bit easier to digest. We say, okay, the cash flows that we have a contractual certainty around, what do they look like? Well, we've got roughly 8 years of term remaining, a little less than 8 years of term remaining, tenant responsibility, landlord responsibility, and the operating expenses and tenant investment in the space over that time period. And then I break out the landlord cash flow and analysis versus the tenant cash flow analysis. So things like total operating expenses, and since the landlord receives some tenant reimbursement, the landlord then is going to net pay, call it $855 a foot. We have the total rent payments. That's inclusive of both base rent plus other rent. So you get the tenant's going to be paying $38.55 to the landlord. The landlord, say in year one, is going to have $14.67 a foot for things like TIs and free rent, as well as there's payments right at the start and then the first year. So in your time zero, there's some payments. And then you have the total operating expenses. From there, you get your net landlord cash flow over the base term, and we calculate from that the net effective annual rent per square foot. And on the summary tab, you'll see that detailed out. We also sum up the total landlord cash flow, and I turn that into, rather than a per square foot or a per meter squared value, it is a total number, 1.872 million, and the net present value of that, based on a 12% discount rate, is $1 million. And then again, the tenant cash flow, what rent payments the tenant's going to be making, what reimbursements the tenant will be making towards operating expenses, the inducements coming from the landlord, the investment that the tenant makes into the space gives us our net tenant cash flow. Some inflow in time zero to help with the space, but then outflows over the entire hold period. And we get the net effective annual cost per square foot. So you'll notice the net effective annual rent is $26.12, and that's because it includes operating expenses. Again, on the summary tab, I'll kind of detail how I calculate net effective annual rent. This is the net effective annual cost per square foot for the tenant, the tenant's total cash flow, and the net present value of that cash flow at a 12% discount rate. So that's from the tenant and landlord perspective, the cash flows. And then I annualize it. And if you recall, I mentioned up above that the cash flows above have a stub year, oftentimes at the end of the lease. Here, I annualize it. And right here, you actually see how many months of cash flows you actually have. So you have 12 months of cash flow at $36.64 a square foot, total rent, tenant reimbursement. The very last year, it's only 2. And so it's $42.31 a foot, but you really only get 2 months of that. But I do this so that you can look at how the rent changes year by year. And then again, same thing, landlord responsibilities, operating expenses, net landlord cash flow. Now I can dig in if I want to into the monthly cash flow that creates these annuals. So if I come here to the left, there's this plus button. I click that and it's going to open a much more detailed section. And this is where I really detail out things like scheduled rent, parking rent, storage, administrative, percentage. I break out the various line items for tenant reimbursement, the landlord's portion, the total expenses, right? And so the growth rates that you see on the other on that other worksheet, those are all figured into this analysis at the monthly level. And then the annual simply sums up the monthly cash flows in each year. And so if you identify a bug, you might need to open up this monthly and kind of audit back to understand what's going on. But generally, it's unnecessary to open the monthly unless you want to really dig into the cash flows. So that is the lease cash flow tab. Let's finish up this video. We're getting a little long on the summary tab. Again, this is a beta version. I'll add things to the summary tab as I get input from users and as I use this tool myself. But what you're going to find on the summary tab really is a printable form. Again, I can come down here, click print. You're going to see kind of a pretty form that could be printed and added to your lease abstract or have this be standalone. And it's the basics of this lease. Building with address, tenant name, details about the space and what's being leased, some lease summary with a tenant description and the lease terms. Again, these are things that are pulled from the lease abstract. Lease economics during the base term only, from the tenant perspective and the landlord perspective. This is where I detail out the calculation for net effective annual cost versus net effective annual rent. So net effective annual rent includes the total annual rent, whatever operating expenses that are associated with the space, the expense reimbursement coming from the tenant to cover some or all of the operating expenses for this space, and any landlord concessions. And again, these are on an annual basis. So things like the concessions happen up front, but then are calculated on an annual basis. So almost 8 years of term remaining, the total concessions are the 8 times 31,000. Or approximately that. If you recall, there's, I think, 86 months remaining. 8 times 12 is 96. So it's really 7 years and 2 months. But you get the point. These are calculated on an annual basis, and you get a net effective annual rent. And I'll remove that per square foot in my next updated version. And then you have the net effective annual cost for the tenant, both on a per square foot and an amount for each. So that's your lease economics during the base term. And then I have a chart that details out the total rent payments per square foot and the tenant reimbursement per square foot. And you can see that from year to year. Looks like I need to do a fix also to this table to add the years at the bottom, which I will do in the next version of the model. And that is the summary tab. Again, printable, includes just the basics that you might want to share with others about the lease. So that is my commercial real estate lease analysis tool. Excited to share it with the world. Hope that you find value in it. And again, if you notice bugs, which undoubtedly there are, or improvements you'd like to make, just shoot us an email and I'll include those in a future version of the model.